Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets of companies to get you the real story. Today we are digging into Focus Universal Inc. S-1 filing to see if this company is ready for prime time or if it is still working out the bugs. We are going to look at their financials, their risks, and their grand plans to conquer a bunch of tech markets. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below so you can chat with us live and dive deeper on these filings. So Focus Universal Inc., or FCUV as they are known by their stock ticker, is filing this S-1 registration statement. This is a big deal because it means they are preparing to offer more shares to the public, and this document tells us everything we need to know about their business, their finances, and the risks involved. Essentially, it is the company's resume for investors, and boy does it have a lot to say. Alright, let's jump into the meat of this S-1 filing. The first thing that jumps out is they are registering up to nearly 10.6 million shares of common stock. This is not necessarily new money coming into the company though. It represents shares that are being issued upon the conversion of preferred stock, which means existing investors are looking to cash out or at least have the ability to. The company itself will not receive any proceeds from these sales, which is important to note. Now, we always talk about the financials because that is where the real story lies, isn't it? Focus Universal Inc. is upfront about their financial situation. They have a history of operating losses. For the 9 months ending the 30th of September 2025, the company reported a net loss of almost $4 million, and for the full year 2024, they lost over $3.2 million. This is a recurring theme. It raises a big red flag for potential investors because when a company consistently loses money, it means they are burning through cash faster than they are making it. This is why they need more funding and why they are diluting existing shareholders with these new share registrations. Let's look at their balance sheet as of the 30th of September 2025. Their total assets are just over $880,000. But listen to this, their total liabilities are $705,000, leaving them with a working capital of only about $65,000. This is quite low for a company looking to grow and operate a diverse set of businesses. Remember, when a company has very little working capital, it means they have little cushion to handle unexpected expenses or dips in revenue. Their operating expenses are a significant portion of their overall financial picture. For the 9 months ending the 30th of September 2025, total operating expenses were over $4 million. This is a huge number compared to their revenue, which was only about $254,000 for the same period. That is nearly $16 spent on operations for every dollar earned in revenue. This is a major cause for concern and points to a significant disconnect between their spending and their income generation. One of the bigger expense lines is compensation for officers and directors. For the 9 months ending the 30th of September 2025, this amounted to over $375,000. While it decreased compared to the previous year, this still represents a substantial outflow of cash. It is a tricky balance for early stage companies to adequately compensate their leadership without crippling their operational budgets. Now let's talk about their Series B preferred stock. The company entered into an agreement to sell these shares at $850 each, but with a 15% original issue discount. This means they are essentially selling these preferred shares for around $722 each, but agreeing to convert them into common stock at a future date. This is a complex financial instrument that often comes with investor protection clauses. And speaking of conversion prices, remember that these preferred shares can be converted into common stock. The conversion price is not fixed, it is variable. This means the number of common shares issued upon conversion can change, significantly impacting dilution for existing shareholders. This is a key detail for anyone looking to invest. As of a recent date in 2025, the company had about 332 record holders of its common stock. This is a pretty small number of shareholders for a publicly traded company. This can sometimes indicate a lack of broad investor interest or that the stock is tightly held by a few large players. Looking at their risks, Focus Universal Inc. admits they are heavily reliant on a dominant customer. This is a huge red flag. If that single customer decides to leave or reduce their business, it could cripple the company's revenue streams. Diversifying their customer base is a critical step for their long-term survival. Now, for where you can find them on the stock market, their ticker is FCUV, and they are listed on the Nasdaq Capital Market. However, the filing also notes that they have had issues maintaining their listing standards due to the market value of their listed securities falling below Nasdaq's requirements. This is a sign that the market is not valuing them highly at the moment, and they have a deadline to regain compliance. This is something to watch very closely if you are a shareholder. Scroll sales of substantial shares of our common stock guys sell. They also warn about substantial future sales of their common stock, which could depress the stock price. This often happens when preferred shares are converted into common stock, and then those new common shares are sold on the open market. It can create a lot of selling pressure that drives the price down. Scroller Company has never paid any cash dividends. ISIL, on the investor returns side of things, Focus Universal Inc., has never paid cash dividends and does not plan to anytime soon. This means any return on investment will have to come from the stock price appreciating, which, given their financial performance and risks, is a big if. Scroll the company currently has two operating segments I sell. When we look at their business strategy, they seem to be chasing multiple exciting technologies like Universal, Smart Instruments IoT, and 5G ultra-narrowband technology, as well as financial reporting software. They have two main operating segments, Perfecula and Lusher, for their SEC financial software operations, and then AVX and Smart AVX for their LED, and IoT installation services supported by corporate and R&D. It is a lot of different irons in the fire, which can be good for diversification, but also spread thin their resources and management attention. Scroll growth through mergers and acquisitions. CL, their growth strategy heavily relies on mergers and acquisitions. They see this as a way to quickly fill business gaps and expand without waiting for organic growth. While this can be effective, it also carries significant risks if they overpay for acquisitions or struggle to integrate newly acquired companies. Scroll port of independent registered public accounting firm Cell. And finally, the auditor Weinberg Sudayamp. Company Pay has issued their report. The key takeaway here is that they have expressed substantial doubt about the company's ability to continue as a going concern. This is a serious statement from the auditors, meaning they are not entirely confident that the company can survive the next year without significant changes or extra funding. So looking at Focus Universal Inc., it is clear they are operating in some very innovative and potentially lucrative markets with technologies like their universal smart devices and advanced communication tech, but their financial situation with consistent losses, low working capital, and reliance on a few major customers, coupled with the auditor's going concern warning, paints a risky picture. Their strategy of growth through acquisitions and numerous tech ventures could pay off big time if they can execute and secure sufficient funding. However, the path forward is fraught with peril, and the odds are stacked against them, needing a significant shake-up or a major breakthrough to truly succeed. That is our decoder look at Focus Universal Inc. S-1 filing, what is your take on these financials, and what do you think about their chances of success or failure? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into company filings. And do not forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we will see you in the next episode of Corporate Decoder.